Hello everybody, welcome back. Let's have a look at Bitcoin. We'll just focus mainly on Bitcoin, and actually only on Bitcoin because, well, it doesn't matter what altcoin you're facing, you're going to be exposed to Bitcoin's move, whether it goes up or down or sideways. There's not, in my expectations, going to be any real relief for any altcoins. I think altcoins are just going to go down in all fairness. And I always say this, I mean, there will be the occasional outlier that won't, but until Bitcoin at least finds a bottom and Bitcoin dominance finds a resistance, then yeah, that's what we're going to be looking at. Bitcoin taking the lead on the dominance chart, and my expectation is that this is how it's roughly going to play out. So, you know, if you want to buy altcoins at lows, you can obviously scale into any altcoin you like as it goes lower and lower and lower. But in my experience, you know, altcoins can go lower than anyone ever imagines or expects, and so for me, I always find that the best time to get into altcoins is when there is a signal to suggest get into altcoins and not try to catch knives on them, because it's bad enough trying to catch a knife with something like Bitcoin in a downtrend with no buy signals, which is what's going on right now. And you don't want to emphasize any potential losses that you would get in this downtrend because altcoins just emphasize that. So, but again, you know, shoot me for that. That's fine. I don't mind. It's just, you know, that's in my opinion, that's the reality of it, really. And look, before anyone calls me a Bitcoin maxi, I'm not. I'm really not. Just a trader, and I like to trade crypto, and the best way to do it is to look about, you know, how the market works as a whole. And if the market's going down, it goes down together. If Bitcoin is dragging it down, then Bitcoin's the one to focus on. Bitcoin needs to find a bottom before any altcoins find a bottom, trust me. And the only way that we'll get a relief rally or maybe a miniature alt season in a downtrend with altcoins is if we hit this resistance, or probably this resistance. We'll probably get a relief rally at this level here, 52%. Probably more likely to hit about 57 to 58 before an actual alt season continues, and that's where we really start to get interested in altcoins. Anyway, you've heard it all before. Don't want to bore you to death. Let's have a look at essentially Bitcoin on I suppose the short-term time frames, because the long-term we've spoken about it many times. Brief overview though, we've got a short signal over here from a few days ago, which is still playing out, and you might argue, but we've been going up for 2 days. Well, yeah, I mean, yeah, we have. I mean, you don't go up without going down, and you don't go down without going up. I mean, there's no such thing as a single direction constantly. It has to happen. There will be bounces in downtrends as there will be pullbacks in uptrends. It's as simple as that. But when we're looking at signals like this one, I do hold weight to it. And this signal that we see here, the conversion baseline on the Ichimoku cloud, you know, it's one of those ones that should be respected and played for what it's worth. Plays out most of the time. And the thing about this one is it gives you an entry point, and it should also give you an exit point. Now if we continue to go sideways, then yeah, we go down, and if we go back up and this Chiku span touches the price action, then that's the short trade over with, you know what I mean? And also, I don't like holding shorts for too long, even if we are entering a bear market, which I'm not saying that we are, but I'm never very greedy when it comes to shorts. You know, shorts shouldn't really last a great deal of time. So that's bearish. We've been rejected on, not even yet touched the 10 exponential. We're just trying to pierce the 33,000 zone, which for those who watch the channel, I do hold that area to be quite significant, because on the weekly we have this green 50 exponential, which essentially for me, if we close weeklies below it, pretty nasty. It does shine a light onto what could be a much deeper correction, you know, maybe into the lower 20s over time, essentially, you know, going into, I suppose, a bear market. Maybe not a massive bear market, you know, like for a 12-month period, but yeah, I think before we start to bottom, we probably start going down a bit more, and even then we'd have to reaccumulate. So yeah, if we start closing candles below here, that's a bad sign. And then what I'd be looking for is if we fail to break above 33,000, then I would be thinking about actually taking some long-term short positions at low leverage, not greedy, no, not going crazy, 2-3x's, you know, and sail it down to see where it goes. But yeah, limit your risk, but still skin in the game. But none of that has yet happened, and so yeah, closing below here is one thing. Trying to get getting rejected from there is a different thing altogether, and it's that confirmation of the resistance. Again, this is all speculative. None of it's yet happened. The weekly candle closes today, and we'll see where we close. If we can close above 33,000, I'll be okay with that. If we close below it, I will be biting my nails, waiting to see how that 33,000 plays out over the next week. Which, to be honest with you, I do expect it to break down below there, as we already have done several times. But it's about where the weeklies close, and if we get weekly closes below there, it would lend itself to a further downtrend, definitely. But I'm not even now. I'm not mega bearish. But yeah, it's just something to watch out for, because it would imply even more weakness than we've got already. So we've already shown that 4 days ago we got that short signal, and we got the death cross on the exponentials, which counts for me way more than simple moving averages. We're likely to come down and retest the 28,000, I would expect, and probably a wick even lower than that. Now, there's a lot of people talking about the Wyckoff reaccumulation. And for me, it's something I've never really been a fan of Elliott waves. Not because I don't recognise their power. I do. I just often find that when I've tried to use Elliott waves, it's not as it's way more like a guessing game in many ways. You can look back at things and go, well, yeah, that is definitely one of those patterns. But I prefer to just move with a trend. Do you know what I mean? And get confirmation using the Ichimoku cloud to say that, okay, a trend may be forming from here, and then let the trend form strength with the moving averages and several other oscillators to confirm when that trend is gaining momentum or losing momentum. It's a simple way of trading. It's pretty accurate. Like I say, we have a buy signal, a pretty accurate one using the Ichimoku cloud, or a sell signal, and then we have strengthening or weakening of trend using other moving averages and other bits and bobs. Adding Elliott waves to that process, I suppose, if I was to really try to do it, would be good. But when I was trying to get my head around them in the past, I often found that they didn't play out as often as I would like them to, and it just added another component to the chart, which overcomplicated things when I already had a decent strategy already in play. So that's I don't know why I was talking about that, to be honest, but but the style of trading that I employ does suggest further downside, and I would also imply that we were probably looking to be rejected more or less from here, or maybe just a little higher. But I'd be surprised if we were managed to break above the 34,000 before the weekend's over. Be very surprised to see that. I think we're more likely to be rejected, if not now, in a little while, between 34. At best, we could probably reach 35.5 and then make our way back down to the upper 20s, and then testing this as support. We'll see this get tested probably a few times before it finally does break down, and that breakdown from this zone is likely to be a nasty one. Probably get bought up quite quickly though, because this is what I was saying on the live stream. Everything is bearish. The chart is bearish. There's no buy signals. There's only sell signals. But one thing we do have in our favour is the size of these wicks, and I always say that wicks tell a story. If we think about the wicks, and we say this when we see wicks at the top, when people are asking me, should I buy more? How far is this going to go? Wicks tell a story. So if we see wicks all the way up like this, and there's a lot of wicks, and the price action levels out, but we have wicks all over the place at the top, it suggests that the sells are too much for it to hold any kind of price up there, suggesting that it's probably not going to be able to go up there. It's tried several times, and that could be the top. So we could employ that sort of same narrative to lows. It's the same concept, just in reverse. What this would suggest is that there's lots of buy pressure. Big wick there, big wick, big wick, big wick, big wick, big wick, and a big wick, and even these are relatively big wicks. And I would expect to see more of these. So we see lots of wicks from the bottom pushing the price back up. There is lots of buy pressure down here, and there will be more the lower we go. So it does, the Wyckoff reaccumulation that everyone talks about, they're waiting for something called the spring, and as far as I can see, it does match up quite well to the Wyckoff pattern, but it's not going to be perfect, and it won't be perfect. And people were thinking that this could be the spring, but from what I can see from that reaccumulation is that the spring should be a lot lower, because psychologically what it should do is scare the last lot of people out of their position, and then heavy buyers come back in, and then the people who've been scared out of their positions get back in at a higher price, basically just cheating them out of some profits. And you see where I'm going with that. So psychologically that didn't scare me, because and that basically, the reason we had this 29,000 area is because this is basically where we found an enormous amount of support and a springboard to complete the top. It's a relatively strong zone, and I've been waiting for this area to get tagged since we started breaking down. That was my final buy order. It was down there. So a spring, from here to me would be unlikely. A spring a lot deeper, maybe even down to around 23, which would be the next area where essentially we went parabolic. This could have been the parabolic top, and if you think about it in terms of the money flow index, it matched the parabolic top reads. Top here, top here, top here. This is 2017, that's 2019, and this is 2000. It's 2020, isn't it? Going into 21. So money flow index got very good tops here, here, and here. And so you could argue that we did go on for a little bit longer than we probably should have done. We probably should have got into a consolidation from that zone, but we didn't. There was a lot more interest in the market, very well publicised by Mr. Musk himself, and it carried it on to form this top over here. But the way I would choose to interpret the spring would be likely to be down at that zone down here. If we were to get down there, it's about 23,000, between 22 and 23. Now you might think, oh my god, that's horrendous, that's so low, I'm going to sell and wait till it gets down to those levels. You know what, it might never go down to those levels, so it's up to you. I can't tell you how to trade, I'm not a financial advisor, but for me personally, I scale in all the way down, just as I would scale out all the way up. That's the best way to deal with it, to be honest. It's the best way, one of the only ways to deal with it. The only other way you could deal with it would be to wait for a buy signal, which means that you have to just wait the summer out, and there's nothing wrong with that. There's absolutely nothing wrong with that. I appreciate some people don't know how to trade, or don't have the time to learn, or even the time to do it. And so, you don't want to be risking things that you don't want to risk, and I get that. And there's an enormous amount of arrogance in the market because the people on YouTube or Twitter or wherever it is are the people, the lucky people. Some of them anyway. Some of them are complete charlatans, But some of them are just the lucky people who actually trade for a living, and with that should come a responsibility, but also being humble. You've got to recognise that most people aren't able to trade for a living or don't have the skills to do it all the time. And to basically tell people that you have to do it a certain way, and you're an idiot if you don't, it's unreasonable. It's very unreasonable. There is absolutely nothing wrong with waiting for this situation to be resolved, and allowing it to either go down or go up before you decide to get back into the market. That's perfectly fine. I completely get that. It's just not the way I do it. But it doesn't mean that there's anything wrong with it. In fact, if you were to do that and we enter into a bear market, let's just say we entered into a bear market and came down all the way to something like maybe $12 or even $8,000, if you could imagine that, then those people might end up winning if they tune back into YouTube or wherever and they recognise that there is confirmation that we are at the bottom, and then suddenly they've got some decent Bitcoin at that level. The only problem with that is that we don't know where the bottom will be. The bottom could already be in. No one really knows. We can only expect it to come down a little further, but at the same time, the whole thing can turn around very quickly. We're still in within the outside range, the 28,000 to 49,000. That's the outside range, and the inside range we're just about trying to get back in there now, but seems to be getting rejected. So this could still be the reaccumulation zone. Could easily still be that. There's enough signals to suggest that it wants to come down more, but we play the cards that we're dealt, and the cards we're dealt at the moment are it's a pretty bad hand, I have to say, but you can still win with a bad hand. So like I say, whichever way you want to deal with this market, it's completely up to you, and nobody should point fingers and laugh at you for it. It's your money, it's your decision. And everybody is in this with a very different situation. So there's no one strategy that suits everybody. No. That said, a pretty boring analysis, I have to say, because it's the same thing we've more or less been saying. Apart from now, the odds are in favour of a further test, at least to the 28,000, and Whether it breaks straight away, and a breakage of this and with a wick is no massive big deal. It could lead to that spring that everybody's expecting. But if we break down here and close candles below 28,000, then we do have to entertain the idea that this is potentially going to be a bit more long drawn out bear market, with lows which we cannot even try to agree on. It can break supports one after another, and it doesn't matter how much Michael Saylor buys, it's not going to help, because the chart is the chart, and it doesn't really matter at this stage in the market. It does not really matter who owns what and why and how much they've got. It's an extremely volatile market. It's always going to be that way until it finds its true value, which won't be for many years. It's going to be like this. So, hopefully that's okay for you, and I hope you enjoy the rest of the weekend. And I'm not joking, look, this is likely to resolve itself over time. It doesn't matter where you bought it from, whether it's up here or here, it doesn't really matter. It will resolve itself over time, it always does. It's the most forgiving asset that I've ever seen, and that can just be shown to you just very briefly to end this on a wrap. This is the longest chart I've got access to here on Bitstamp. And it's on a log scale, and we can see that we enter bear markets and then we recover, we enter bear markets and we recover. If we enter a bear market, we're likely to recover, so it doesn't really matter exactly where you bought it from. If you're underwater now, you're unlikely to stay there for an inordinate amount of time, but I can't sell you hopium. All I can sell is is reality, really, which is that nobody knows exactly which way this is going to resolve itself in the short term. But if I had to make a guess, I would say that we're going to see wicks lower than we've had already, and maybe we'll spring from there. It depends on where we get rejected from. Rejections from 28 to 29, maybe even 30, not good. It lends itself to further downside to about 23, 24, and then that becomes our turning point. If we break down from there, then I would imagine this blue box zone to start to get very juicy and tasty, and it's between 18, about 17 to 18, and then of course we have to talk about where it's going to go from there, and so on and so on and so on and so on. So don't let anybody tell you exactly how it's going to work out. Nobody really knows. My expectation is that on the short term and on the very long term, it will resolve itself to go on to make new all-time highs, and phenomenal ones. But your only issue, I suppose, is time. But don't let people tell you what to do. Make your own plan, and so long as you stick to a plan that you've thought about, with a good degree of I suppose without adding a load of emotion to it, formulate a plan. How are you going to get through the short term? What's your expectation on the long term? How are you going to cope with a bear market? What's your exit plan in a bull market? These are sort of things. If they're all written down and planned out in advance of any of these moves taking place, all of this just becomes noise, and you can just relax. And again, we're just about to go into, we already are in the summer, aren't we? We're enjoying the summer already. Let's enjoy the rest of it. Okay, it's not a bad time to carry on with the rest of your life. We can let this whole thing sort itself out. I'll always be here. You can tune into me once a week if that's what you want to do, and we'll see where we go from there. But for the moment, I imagine from week to week it's going to be pretty much the same until we get some kind of bottom signals or a buying signal, which none of those we have. Anyway, thanks for watching. Hope you have a nice day. Take it easy.